Jenkins from Follow Me Trades. And David and I actually conceived of this AYT a couple years ago. And yeah, it's been fun. I'm always happy to come back.
Yeah,
And
this concept evolved quite a bit over the
yeah,
years, but it's still going in some version of its original concept. So
yeah, yeah. So, I'm a trader and I enjoy looking at charts, analyzing charts, talking to traders. So that's what we're here for. So anything you would like to look at, go ahead and type into the chat. And I'm showing my chart here. This is sink or swim. And just a quick look, what indicators am I using? This is a daily chart. I'm into swing trading stocks and ETFs primarily on a daily time frame. This heavier white line here is a 200-day moving average. The lighter one is a 50. The shaded thing is a simple version of Ichimoku Cloud. You can see some Fibonacci extensions, retracements, and a price oscillator so we can see divergence and momentum. And, I use Dow theory trend analysis, higher highs, higher lows, higher lows for uptrends, lower lows, lower highs for downtrends, and a very, very simple version of Elliott wave. So that is what the tools we'll be using and the approach I'm going to take. I just want to give a quick backdrop, my take on the market. I do have a Substack here and I publish a market newsletter for free, and you're welcome to subscribe to the newsletter. And the market part is free, and then I have a picks service, which is premium. But just to look at, my take on the market, I published this yesterday after the market closed, right? We got the conflict in the Middle East, which is causing some real jitters and volatility ahead. And we got I call it a short week with long shadows. Middle East tension, China, kind of went out of the headlines, but it's still in play. And we've got a holiday. So we got a short week. Thursday is the Juneteenth holiday, markets closed, and then Friday is quadruple witching. So, on the update, there's a calendar of an important event. So, market closed, quadruple witching. We got Fed heads talking, right? And the S&P 500, which I'm showing here, after the tariff shock has recovered, here's our all-time highs, and we're pretty close to it, and we're just going flat. Last week we had a bit of a drop as the Middle East situation developed, but it's sort of recovered and just looking for the next catalyst. So I'm a little leery about just going long, right? I think it's a time to be very, very nimble, maybe shorten the time frame on trades and be prepared to act quickly as things develop. So we got a couple symbols here. So Fred, PLMR, I'm not sure I recognize that. I'm always curious to see something new. Palomar, I think I've heard the name. And one of the things you'll see on my chart is up here, quick little indicator that was written for Thinkorswim, and it's the volume so far today, the accumulated volume today. And it gives me just a quick sense of the liquidity, right? And we are a couple hours into the session and it's traded 34,000 shares. So it makes me believe that this may not be, I like typically the stocks I trade have about a 10-day average of 1 million shares a day. I just really like deep liquidity, good option market. So this one may be a little thin, but it's been in an uptrend for sure. We can see, a fifth grader, if you asked them, what direction it's going, would say up. And, according to Dow theory rules, it's just putting in a series of higher highs, higher lows, higher highs, higher lows. And you can see the 50-day moving average is above the 200, and it's finding support every time it pulls back somewhere to the 50 and then reversing. So it's down to the 50 now. So, it's a mature trend. At some point, all mature trends correct. Is it yet or not? I would wait and see. If it penetrates the 50 and closes below it, then we probably got the correction coming. If it supports and heads up, then the trend could continue. I wouldn't take it right here. I would wait and see if it heads back up and at least up to the last high, maybe on to new highs. But I am concerned about the volume. It may be a little thin for my taste. So that's PLMR, PAYC, Paycom. All right. So I'm going to zoom out, get a couple year view, right? Each of these lines represents a year, so we can just see a big picture. So it's been in a bit of a slide, and now it's starting a bit of a new uptrend move, gapped up back here on earnings, and we got the cross 50, the golden cross 50 over the 200. So this looks like a new trend. And so now we can zoom in on it. And it went up, got the cross, found support at the 200, up, pulling back, finding support at the 50, the cloud's still green. So the same thing, if this finds support and it looks like there's early signs with this candlestick right here. If it starts back up, this trend could continue on to new highs, 100,000 shares so far today. So again, that may be a little thin on volume for my trading rules, but yeah, um, it's not the most orderly thing in the world, but it does look reasonably bullish to me. And again, I would look for support and then maybe take that long trade if it meets your criteria. All right, Barb would like to look at GameStop, GME. All right, so everybody knows, this was the meme stock, right? And since then, it's gone a little flat, and you can see the 200-day moving average. It finds support, it goes up, went under, and now it is under. Gap down here, and that one's tough. Um, yeah, it's unpredictable. There's no, and I really like a very simple version of Elliott wave where you get an impulsive move, a correction, and then a follow-on trend. And this one just is meandering, and it's almost a channel. And the fact that it gapped down here, right, but it's got resistance above it, it's got a floor below it, and the floor, I mean, is this prior low support level? Right? And typically, once it crosses definitively, this can become resistance. It didn't in this case. These gaps can be resistance. So, there's upper and lower boundaries here, right? Support here, potential resistance here. So I just don't like it. I just don't like it. And Doug asks if I trade stocks under $50. I do. In fact, um, I have a slight bias toward lower priced stocks, and the reason is, I primarily trade options. If I'm going long, I'm just going to go a strike or two in the money with a call option. If I'm going short, strike or two in the money with a put option. And if you're trading Chipotle and it's several $100s, right? It depends on your account size, but it can limit the number of contracts, right? The contracts can get very, very expensive. And I love having the flexibility, right? Of multiple lots, the ability to scale in, scale out. Um, and the price moves on lower price stocks sometimes can just be more dramatic. And I've encountered traders who, said, I'll never trade a stock under $20. It's like, well, you would have missed out on GE, right? Before they did a reverse split. As though, the stock price has anything to do with the market cap or the legitimacy of the company, and it doesn't, right? And you can have a $15 stock that has a larger market cap than a $200 stock because it's stock price times outstanding shares. So, long answer to yes. I'm curious, Doug. Do you have any symbols you are interested in that are under $50, or do you have a bias against low price stocks. And anybody else who wants to weigh in on the topic, happy to hear from you as well. And while we're waiting for an answer, I'll show some that I'm kind of interested in. I'm always keeping an eye out for short trades. In short trades, sometimes they take the stairs up and the elevator down, is the old saying. If you get a good short trade, they can be very profitable very fast. And um, so I always keep an eye out, right? Okay, Doug, he agrees. Good. Okay. So in terms of a short trade, I've got one right now that I've traded lows up and down. It's kind of a nice short setup right now. And you can see it's been going down. We got the cross, right? They call it the death cross, the 50 under the 200-day moving average. Um, and we've got a series of lower lows, lower highs, lower lows. It turned around a little bit, but then low, lower high, low. And there's something about the options on lows that when it goes down, man, and if you, again, I just like to keep it simple in the option strategy for the most part. Go a strike or two in the money, take it, give it, get an expiration about 30 days out. Um, you get a bit of a delta on it. You don't pay as much for the intrinsic value, the implied volatility. And lows, when it drops, man, the options, you make some really nice profit. Um, so what if I were to short lows right now, the contract I like on that, it's sitting here at 214. So let's just look, right? We are at June 17th. They have weeklies, but I would just go with the monthly. So the July 18, right? And we would be going with a put. So I'd go with the 210, right? That's $4 in the money. And right now it's 410, 430, right? 430 ask. I would put in a limit order, say 420 and try and get a better price. See if it fills, go to 425, right? Plenty of open interest. Yeah, so that's how I would trade lows short right now. And who knows, I just might. I kind of like it. And Doug says, Archer, you're stuck in right now. Is that Archer Daniels Midland that you're stuck in now? Or a different one? Anyway, MK wants to look at Rivian. I see their cars, trucks all over the place here where I live. They're cool. Oh, aviation. Okay. So Rivian, look here, 12 million so far today, not even halfway through the session yet. So that's awesome. I love that liquidity. We're just going to zoom out. All right, so they IPO'd, a bunch of excitement, and then drifted down, a high of 180 bucks sitting here at 13. Um, so now we go, okay, what's the opportunity? And I can see something interesting here. And what is interesting is, uh, you know, we've danced around the 200 here a little bit. We're above the 200, went above it, found support, went to a high, pulled back. It's not a new low. It's at the 50. It's finding support. We've got the cross here, and we took out this high, this prior high. So quite often these prior highs, these reversal levels can be resistant. So once it goes through it, um, well, that's good news, right? And so well, it's good news. And now we're finding support here. So I'm very interested in this one, and I like it a lot. They had earnings on the 6th. There's a question mark, so it's not confirmed, but it's not till August. So there's plenty of time before earnings. For a swing trade, I don't like to hold through earnings, right? Try to time it between them. So I would set a trigger on this is quite often this is what I'm going to do. It's pretty rare to find a trade and you go, wow, right now, good to go, right? Jump. Quite often it's like, this would be good if. And so we put it on what's called a watch list. I'm just going to watch it and keep track. And then if the thing happens that I want to happen, then I can set an alert, and I'll show you how to do that here in Think or Swim if you don't know. All right. So if it were to come get above this high, right, find support and get above, and that's yesterday's wick, right? So we can just look and go, okay, yesterday's high was 14.14, so above that would be 14.15. So let's put um, a line there and then edit it. And we said that was 14.15. And I used blue, light blue as my entry. Use a consistent annotation, and then so when when I pull this chart back up, I instantly know what I was thinking. And so I'm gonna put another line here. For now, right, today's low would be my stop, right? And so today's low is 13.26, so one tick below 13.25. So let's do 13.25. And red is my stop. Okay. So if it goes lower today, we could adjust that. But for now, this is a kind of a draft uh, trade setup, right? And this is a new trend, so it could go pretty high. But I'm going to say, okay, what if it were just to stall at the prior high? And what I'm trying to do is figure out the reward to risk on the trade. So I'm going to call this a target one, right? I'll just round it 1675 and the target. If it were to go there, of course, that'd be green, that'd be profit. And now I can visually determine the reward to risk. The risk is my entry to my stop. My reward is my entry to my target. Okay, this is like 3 or 4 times. So that's awesome. I never want to risk more than I could win. That's a losing strategy, my opinion, backed up by math. So if this were to hit this trigger level, 14, 15, uh, I'm probably going to take the trade. And um, what you can do, again, some people know this, some people don't, but I'll show you. I can put it on a list here. These are all called watch lists. You can create a lot of them in Thinkorswim. And then I come over here, right click and say create an alert. And Rivian, and I'm going to say if the last price is at or above 14.15, then give me an alert. And you can see now there's an alert set here. I got a little thing here, and I have this configured. I'll get a text message it actually comes from Schwab since they own Thinkorswim now. Right? I'll get a text message and it'll say, hey, Rivian just hit 14.15. I'll come back, look at the trade, make sure everything still looks good, see if the stop's right. And then as of today, this moment, uh, let's look at what contract would make sense for me. All right. Same thing. I'm going to go out to the July monthly, right? It's at 1361. So here's 13, here's 12. You can get a delta of 80, which is amazing, on the $12 for a buck 98, buck 96. Huge open interest. So I like that. The difference between a delta of 81 and 65 is actually big um, for a swing trade. If you're just going directional, right? What that means is, the delta is how much the premium is expected to change for a $1 move in the underlying. So if you're doing a swing trade, you're going long, you want, your profit, the price of the contract to go up. as the stock goes up, you want to go up as much as possible. So a higher delta is going to get you that. Okay. If you're doing, different kind of spreads and stuff, then you may want different deltas, different implied volatility. But just a long position in the money call contract, a higher delta is better. And then you start looking at, what's the payoff to get higher delta? What's the cost? Right. So this is a real sweet spot, right? Buck 96, right? Because you have to pay like almost another dollar to get the other strike. So this is good. Um, I like it. So that is a setup uh, that looks pretty good to me on Rivian. And if I get an alert and it gets triggered, uh, I may uh, I may go take the trade and publish it to the subscribers. And Matt is asking the question, is Rivian price too low for options? Well, what do you mean by too low? Uh, it's sitting here um, at 1364. So 100 shares is 1,300 bucks of capital. So I could go buy 100 shares, right? And if it goes to my target, it's it's going to make $3. So that's going to be like a 25% profit. 1,300 bucks for 100 shares and a 25% profit. So I'm going to make, what, 350, 400 bucks. If I trade the option, right? Again, 1,300 bucks here. If I buy the option for, uh, let's round it, call it $200. Now I got $200 to control 100 shares. And if it goes to $16, right? Um, if we gain 80 cents per dollar, right, that's going to be uh, 240, maybe, $300. So I'm going to more than double my money. So I'm going to make, 100% profit versus a 25% profit. And let's just say, I was going to buy 100 shares, I'm going to do 1,300 bucks. I can go for a $200 option, I can go buy six or seven of these for the same capital. And now if I double, right, I'm going to make um, 700, 800, whatever dollars versus the $300. So no, the short answer is uh, I don't think it's too low priced for options. And he's at 25% in 1 month, low probability. Well, these red lines are months, and it moved from 11 to 17 in a month. So it's happened before, is my answer. More than once. 10 to 15. That's a 50% move in a month. So I think that's not an irrational thing to say, could it do it again? It's a volatile stock. Volatile in the sense that it makes big moves, but it makes them in reasonably orderly fashion. So that's all very good, right? Yet you can have an orderly stock that only moves 1 or 2%. Well, not very exciting. But if we have something that actually makes big moves and is reasonably orderly, has some degree of predictability, we have some kind of edge on the trade, well, that's a good deal. So yeah, I like it. And thanks for bringing it up. Who was it that typed in? So it was MK uh, something. All right. Uh, Here's another one I'm interested in. Go ahead and, if you got others, type them in. Fail. Fail's fun to trade. I've traded it many times. Of course, it's you know, precious metal mining, not just gold, but lots of other stuff. Um, so big picture, big long slide. It's below the 200. We had the death cross a couple times, right? And it's just bumping its head on the 200-day moving average. And so, yesterday it bumped its head again. It did it here, it did it here. So, uh, one of these days, maybe it'll break through. And if it does, that'll be a big deal. Um, and right now we got a high, a higher low, and a high indicating potential, it's not huge, but it's a potential trend change after this kind of long slide. So same deal, you can set an alert, make sure it really goes through, but set an alert somewhere around here, right? Look at the volume on this. 54 million shares so far today. I would say that's liquid. So that's a good deal. Um, let's see if that breaks through. Set an alert and then come back and go, hey, does this make sense? Because this would not only go above the 200-day moving average, but above this high. Again, bringing some credence to the idea, maybe bump that up a couple ticks there, to the idea that, hey, we got a new trend going on here. There's something cool. All right. Barrett wants to look at STNG, and Sam wants to know where he can find my record. Real quick, my website, Follow Me Trades. Yeah, I have it bookmarked here. Yeah, FollowMeTrades.com. And click down a few pages. I changed how we did the historical record. There's an explanation for that um, on the page there. I don't want to get too far off track. And look at that, we got 2 minutes left. So for Barrett, let's do STNG. And so, hey, if you want to find out more, go to that homepage. I just put the link. There's a way to sign up, get some free collateral. Yeah, you can go to my website and you can join my Substack for free. Get the market update, right? And there's information on the premium thing. Okay, so here, Scorpio, that's a big picture. So it ran up, pretty big correction. Looks like a new trend forming. So it's obviously in an uptrend. We've had the trend change going from lower lows, lower highs to high, higher low, new high. It's in high territory. Dividend has already been paid out. Earnings have already happened. You got the 200. So that's actually a bullish setup now. The volume, probably going to make it to my threshold of 1 million. So that could be taken now because it's a new high. I would use the target as the 200-day moving average as a potential resistance area, and I would set a stop under, kind of this consolidation. So stop here, entry here, target here. You got about a 1.5 to 1. So the reward to risk is okay. Not great, but okay. And okay, that is a wrap. Don't want to crowd into the next presenter. Thank you, traders, for your time and attention. Hope you found it interesting. Check it out, Follow Me Trades, or on the Substack. Thank you, David, for inviting me back.